Well, good afternoon. You've tuned into your stocks live from CNBC-TV18 Motilal Oswal studio. Thank you so much for tuning in. I'm Vinny Motiwala. A look at the market, recovered from the day's lowest point, but flip-flopping between the red and the green. That's what Nifty is doing right now. Right now, it's down 0.1% in trade. 22,000 is what it's managing to hold on to. But yes, it did see a recovery coming in from the day's lowest point. That's how the market setup is looking like. But this is a show where we solve all your stock-related queries that we have. And before we start with the queries, let's introduce our experts for today. We have Ashish Kyal, CMT, and author at Wave Strategy Advisors, as well as Gaurang Shah, joining in with us, Vice President of Geojit Financial Services this afternoon. Good afternoon, Ashish, as well as Gaurang. Ashish, levels. What should we be keeping an eye out on? 22,000. Right now, it's managing to hold on to that. At one point of time, it was below that level as well. So what are we keeping an eye out on in terms of levels for the Nifty as well as the Nifty Bank now?
Hi, afternoon to you and all the viewers. If you look at Nifty right now, I think today's low is very close to that 22,000 psychological mark. That's the level I'm looking at. As of now, there is no signs of recovery. If you look at past 18 trading sessions, 17, 18 trading sessions, we have still not closed above prior day high, which means there is no signs of recovery. We need to see that some kind of a consolidation. So for now, I'm going to keep a close watch whether Nifty is managing to break that 22,250, 260 levels, which it made in today's high. If that happens, then we can expect some kind of stability and upside pullback towards 22,400. If that is not taken out and the low of today around 22,000 is broken, then 21,800 is the target. So right now, wait on the sidelines, let the market decide which levels it has to break and trade in that direction.
Okay. On that note, let's get started with all those stock-related queries. Keep an eye out on those important levels that Ashish was mentioning as well. The first query for today we have is coming in from the private bank side. We have Bhavna Agarwal, who's writing to us from Mumbai. She's holding 50 shares of ICICI Bank. This is at a price of 1,070 rupees per share, making some bit of a profit on this one. Wants to know the 6-month view on this stock. Gaurang, let me come to you. Even though the viewer is talking, more on the short-term side of a view, but ICICI Bank in the last 6 months, when you look at it, is down 3%, while the Nifty Bank is down almost 7-8% in the last 6 months. Nifty Bank versus ICICI Bank, overall in the banking space, would you suggest that the viewer continue to hold her stock? Or what should she be doing? Switch to some other private bank? What is your view?
First of all, thank you so much, Vinny, for having me on the show. Good afternoon to all of you all. When you have strong names in your portfolio, like ICICI Bank, I don't think you should be looking at short term, especially in times like this when there is a lot of uncertainty for the markets, at least in the immediate short to medium term. And if you keep that kind of thought process, that you may end up taking a wrong decision, exiting the stock, wherein you would have been much better if you would have changed your time horizon from a long-term point of view. So we have a buy on ICICI Bank. That's a prudent disclosure from our side. Our conservative targets are somewhere close to about 1,450, 1,450. And if I have to look at in terms of performance for large cap private sector banks like of ICICI, Axis and HDFC, then I think ICICI Bank has done much better and they will continue to do better. And as a brokerage house, we at Geojit are extremely positive and overweight on banking and finance on the fundamental side.
Okay. Overall banking finance space is only looking attractive to you all as well. Ashish, your view on ICICI Bank. What should the viewer do? 6-month view of the stock. So on the technicals, anything that you could point out to her in terms of levels as well?
Yes, if you look at ICICI Bank, there is a very important support at around 1190, 1180 zone from where the stock has bounced back multiple times even in the past. So it's better to keep a watch on that. As long as 1180 is intact, we can expect some kind of a upside reversal possibility from here. Also, interestingly, this stock has outperformed. If you look at the major major leaders of the index, this stock has still not broken below the low which was made in the month of Jan 2025. So it is showing outperformance and continue to hold on. And if it can increase the time horizon to at least a year and a half, 1 year and a half or 2 years, I think that would be better, because even if it goes below 1180, I think the stock is not going to fall much. And then eventually when the broader market reverses up, this stock should outperform.
Okay, let's move on to the next query for today. This one is coming in from Ranjit, who's writing to us from Kerala. He's holding 270 shares of Tata Motors. Average price is 734 rupees per share. Wants to know whether he should continue to hold this or look to sell this one. Obviously, they did give those domestic sales numbers as well, and most of the segments saw a bit of a drop in the sales this time in the month of February. So, Gaurang, your view coming in for Tata Motors, given that the buying price right now of the viewer is a bit more than what the current price is?
Well, so, Vinny, first of all, I think this has been one of the underperformers in the recent times, mind you. When you look at the large cap names in the four-wheeler pack, primarily because of the second, third quarter numbers, and of course the issues with respect to high-end premium segment vehicle that Tata Motors has, that is JLR. On the fundamental side, we are positive on Tata Motors with target close to about 850 plus levels. It will take a while for the stock prices to change its trajectory from down south. I think earnings have to improve, which may take a while. But from current levels, the downside looks protected. Point number one. Point number two, if you're a long-term investor, hold on to it. And if you have investable amount, I think at these levels or a little bit below, you can start accumulating it from a long-term point of view. My sense is that the demerger of commercial vehicle and passenger vehicle business, along with that, the strong statement was made to make the balance sheet debt-free, will augur well for long-term investors.
Okay. And Tata Motors, your view coming in on this one, Ashish, what should the viewer be doing in terms of the technical levels that they should be keeping an eye out on? And do you think 734 in the near term is something that we should watch out for? Because Tata Motors, do not forget, has seen a fall of almost 40% in the last 6 months. So it does worry an investor who does have the stock. So what should we watch out for?
Yes, absolutely. This stock has underperformed the entire auto space if you look at it and compare it with other auto stocks. But I think the correction is should nearly complete, because we have already seen a 50%, almost a 50% retracement, and the stock has a very important support which is around the levels of 590 and 600. So my suggestion would be continue to hold on to the stock here, maybe possibly add a little more to average it out. On the downside, 550 is going to be very crucial. I don't think that is going to be taken out in the near future as of now. And on the upside, 734, 735 is achievable. So hold on to the stock and possibly average it out a little, but ensure to maintain a stop loss of 550 at the current level. Just as a disclosure, we do have investments in the stock.
Okay. Absolutely. Keep an eye out on those stop loss levels as well. That is important as well. What Ashish feels, maybe the correction is a bit over now and you could look to average. That's a view coming in there. Let's move on to the next query for today. This is on LIC. Now, Dhruv Kapoor is writing to us from New Delhi. 30 shares of LIC he's holding at a price of 600 rupees per share. Currently, the stock is trading at somewhere around 728 rupees. Wants to know whether he should sell this, remain invested in this one. And, if he looks to sell, should they look at something else? Gaurang, what's your view coming in on this?
Well, so the entire insurance pack has been a little bit sideways performer. I think I would be right if I use the terminology. LIC, HDFC Life, ICICI Pru, SBI Life, to name a few on which we have covered it. So on LIC, we have a buy recommendation. 1,000 plus is the level that we are looking at from a long-term point of view. And for an investor, who's looking at investing in insurance, life insurance related companies, I think it'll be prudent to have a little bit of stretched up time horizon. That's purely because historically speaking, Jan, Feb, March are the month where the insurance premium collection rings good numbers in terms of quarter collection, last quarter collection. Along with that, I think what has changed over a period of time, especially post-COVID, is people used to look at insurance product as a tax saving product. I think post-COVID, a lot of people have realized, especially the millennials, that they need to have a term insurance and with a large sum assured. So by that view, your run rate in terms of new insurance flows will start coming in much better over the next couple of quarters. Hold on to it. And if you want to invest, I think add on to it. We would definitely recommend that as well.
Okay. And, Ashish, do you have your view on LIC as well? What should the viewer do? Sell or remain invested?
See, LIC had a previous peak at around 685, 690, which was made in the month of September, October 23. That was the high from where it showed some kind of a fall, and then the sharp recovery on the upside. So these levels tend to act as a very important support. So I think 685 is going to be very, very crucial support for LIC. The stock has already completed its three-wave decline, and I think there is a possibility of a bounce back from the current levels even over short term. So my suggestion would be to continue to hold on to the stock. 685 is the support level, and on upside we can see the stock back about that 820, 830 levels very soon.
Okay, keep an eye on those levels over there for LIC. Let's move on to the next query for today. Rahul Kapadia is writing to us from Gujarat. He's holding 300 shares of NTPC Green Energy. This is at a price of 126 rupees per share, making a loss on this one. Wants to know whether to continue to hold or sell at the current levels. Gaurang, your view on NTPC Green?
So, Viri, if I recollect right, the floor was 108 at which the shares were given out to the subscribers to the IPO. We had a long-term subscribe to the NTPC Green IPO. It's currently at 87, which is at a far deep discount to the IPO price. If I have to keep that IPO note as a base of my recommendation, first of all, hold on to it. If you have investable amount from a long-term point of view, if you invested at higher level, you can average or make a fresh investment as well. I think this entire clean and green energy sector will take at least 2 years to meaningfully start giving returns to investors.
Okay, could start giving meaningful return to investors. Ashish, your view on this one as well?
See, there is not much of a price data, I think, on NTPC Green because the data is from December. But having said that, right now, I will not be able to comment where is the support since the prior price action is not there. But on the upside, I think the stock needs to cross back about that 95, 96 levels in order to stabilize. So I'm going to keep a close watch. If 95, 96 is managed to be broken out, then yes, we can then expect a move towards 115 on the upside.
Okay, surely lesser, traction in terms of data points for you to track, but thanks for the view coming in there. On that note, actually, we'll slip into a very short break, viewers, and here's some good news that's coming in for you all. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code on the screen there. Welcome back. Thanks for staying tuned into your stocks on CNBC-TV18. We still have with us Ashish Kyal as well as Gaurang Shah to solve all your stock-related doubts. But let's keep it going. And the next query is on Jupiter Wagons. Ritika Chaudhary, who's writing to us from Noida and holding 25 shares of Jupiter Wagons. Price is 534 rupees. Wants to know, as a long-term investor, what should they be doing with Jupiter Wagons? Continue to hold or look to sell this one? Gaurang, your view coming in for Jupiter Wagons. Railway stocks obviously had seen that run up in the last couple of years. Then we saw that bit of a subduedness. Some of them have those execution concerns coming in. Yes, there is a lot of opportunity, but Jupiter Wagons, now what should the viewer do?
Well, I think there are going to be a lot of challenges for all these stocks which are rallied 50% or maybe more, whether it is railways, whether it is defense, or if it is going related to any other sector. The problem really is how to deal with the downside. Unfortunately, I'll leave it to Ashish to answer this question because we don't have coverage on Jupiter Wagons.
Okay, Ashish, it's to you. What is the level that we should keep an eye out on for Jupiter Wagons? Last 1 year, stock is down 22%. 6 months, it's down 50%. Just in the last 6 months, we've seen major fall coming in. Level that we should keep for Jupiter Wagons.
Absolutely. If you look at if you look at the highs, the stock was trading somewhere around 736 in the month of July and 2024, and it's now 283. It's more than 50% on the card that we are seeing. Having said that, there is a very important support for the stock which comes around 265, which was in October 2023. That's the low from where it bounced back sharply. So I think 265 is going to be very crucial level. In case the stock loses below 265, better to be out from here. And if it manages to sustain that level and reverses up, then continue to hold on. We can expect it to move back toward the level of 390 on the upside and 400. These kind of stocks can move very fast in either direction. So maintain the stop loss and 390 and 400 is the level where you can look out to book out your losses.
Keep an eye out on there on those levels for Jupiter Wagons. Let's move on to the next query. This query has two stocks. One is Century Ply and other one is BSC. Now we have Shiva Raja, who's writing to us from Pune, holding, and he wants to invest in Century Ply as well as BSC, and is asking if this is the right time to invest in these stocks. Gaurang, your view coming in on both these. You know, one is a proxy play to real estate side. The other one is this capital market stocks. They have been of high interest to a lot of people as well. So what are you watching out for here? And, you know, is it the right time to look at both these?
Well, so, to answer your second question first, I think each and every entity which is a strong play associated with the Indian stock market, if you have the next 3 or 5 year kind of time horizon, whether it is going to be a platform provider, whether it is going to be a service provider, or whether it is going to be an intermediary, provided they have strong balance sheet and strong business roadmap or business strategy, with that kind of view, all those companies are likely to do well. I won't give specific on BSC because we don't have coverage, but on Century Ply, yes, it's a proxy play to the real estate sector, which has been doing well in the past. Unfortunately, this has also gone into a profit booking mode. With the kind of lineup of business that Century Ply has and the opportunity. So it's not only limited to the new home decor. It is also, associated with the refurbishment that we do for our residential premises. It has got great product offering across different segments. We have a hold on the stock from a long-term point of view. And if you want to buy it, you can do that as well.
Okay, and Ashish, your view on both these stocks in terms of levels, is that the right time to enter, or should the viewer wait before they enter both these stocks, Century as well as BSC?
If you look at Century Ply, I think the stock is at a very important level where it gave a breakout. The good part about this is if you do a ratio analysis of Century Ply with respect to the Nifty 500 index, you will see a strong outperformance. Where we are seeing where many of the stocks that have corrected very sharply, Century Ply has still outperformed to a lot of extent. So there is an inherent strength. I would recommend that if he wants to invest, he can definitely consider Century Ply at current levels for investment. On the downside, the support for the stock is around 634. And on the upside, once the 900 level is taken out, I think it will start the third wave on the upside. So the stock looks very interesting. As far as BSC is concerned, it has shown one of a dream runs that one can imagine. The stock was in 2023, somewhere around the zone of 430, it touched the level of 6,000. That's like more than 10-12 times. The stock has gone up, and we are seeing a correction over the past 3-4 days where the correction has intensified. So I would suggest here it's possible to invest into BSC, but right now, since we have started the profit booking, maybe wait for a few more days to see if there is a further correction towards the level of 3,800 on the downside, and then start nibbling across the stock. So right now, wait for entering into BSC. 3,800 is the level where you can start nibbling in. And on the upside, the stock can then eventually break 6,000. But yes, the target has to be, the time frame has to be bigger. Like Gaurang also mentioned, it has to be at least a year, at least 2 years is what I would suggest.
Okay. Long-term time frame. Wait in before you start looking at BSC again to buy those at the levels that are mentioned by Ashish there. Let's move on to the next query. We have, this is coming in from Vishnu Mohan, who's writing to us from Kerala, holding 2,500 shares of All Cargo Logistics. It's at a price of 67 rupees. So the stock is currently at 30 rupees, so clearly making a loss. He's a long-term investor, so has no problem holding it. But should he hold or look to sell? What's the hope on All Cargo Logistics, Gaurang?
Well, while the sector looks promising, but the stock is not, let me be very honest. We don't have coverage on all cargo, so I wouldn't give any specific over there. But I think there are better names in the sector. And one of the names that we have coverage is the largest player in this particular sector, logistics sector, is Blue Dart Express. Of course, the price difference is way too big. But one needs to be careful in this kind of a market, Vinny, when it comes to lower double-digit or single-digit stocks. You need to be extremely careful.
Okay, Gaurang, thank you so much for that. But that was the last query for today. So thank you so much, Gaurang, as well as Ashish, for joining in with us on the show, helping our viewers solve all those doubts at a time when the market is so volatile specifically. But with that, it's a goodbye from myself as well as the team who put this show together. Don't go anywhere. You have closing bell. We'll take you to the last 1 hour of the trading session.